How's it going, guys? This is Forensic Forex with Deontay, where we analyze the details and specifics of the foreign exchange market. This is going to be another example to the IPDA Data Range Library. Here, we're looking at AU. So for the month of April in 2023, I had chose AU. Well, essentially, you guys had voted it. If you are new to this channel, I do a poll every month, and I put a couple pairs through a filtering process, and I post it in the Telegram channel, and you guys pick and vote for which one you guys want to see me trade and track for the month. And AU had won during that selection process for that month. And we're going to show exactly how IPTA was significant in the month of April. So, as always, we're going to come here at the start of the month and we're going to look back 20 bars. Just use that shortcut. One of the fellow traders had told me to use in the comments. Thank you for that. I really do appreciate it. I'm going to go back 40. I think that's correct. And then we're going to go back 60. And then we're going to go forward 20 bars because 20 bars is the playing field and where we expect a trade setup to unfold and price to most likely target a new liquidity pool. As always, we're anticipating a quarterly shift going into the new month. That's the whole point. Even though we see that March was slightly bullish, right, and slowly showing us that higher swing high, higher swing low trend formula, that doesn't necessarily mean it's going to continue because we know the market does gyrate month to month. And we're trying to anticipate a quarterly shift. That's just my stance on it. Every single month, I'm trying to see whether or not if price is going to change its trend. And I want to be able to get on top of that before retail traders. Retail traders are most likely going to be late to the change in the trend. I'm going to be using IPTA to anticipate that change in trend. So here, we're going to find the highest high in the last 20 days. So starting from April 3rd, the first official trading day of the month, we can see that this was the highest high within the last 20 days. So it's already broken going into the month. So you can see that. I'm going to go to 40, which is up here. And then we're going to go to 60-day look back high, which is up here. Now we go to the lows. We got the 60-day low, 20-day low, correction. Then we got the 40-day. Notice it's already been broken in price going into the new month. That was a question I had one of my fellow traders had asked me. They had asked me, what about the 40-day low? It's already been broken going into the month. It's okay. It's still significant. Draw that price point all the way out. Cut through candles. We still want to use that because it could be significant in a trade idea. And we're going to find the 60-day low. You can see it's this one here. And as always, I like to mark off the opening price for the month. So this is April's open. And I'm not quite sure exactly what I talked about during this month for the daily tracking. That's up to you to do your due diligence if you want to go back to that playlist and watch that month. Like I said, those videos are really short and concise. It just shows you exactly my thought process behind finding the daily draw and where I suspect price to be drawing. Is it going to be drawing to the previous daily high? Is it going to be drawing to the previous daily low? Is a fair value gap going to form? And I think it's going to make a higher swing low inside the fair value gap, etc., etc. Please do your due diligence. Like I said, this year was packed full of gems. If you missed it, you missed it. But you can always go back and rewatch the videos. I keep them short and concise because a lot of people have long videos, and I know time is money, and the way content is being created is short bang. Everybody wants information quick as possible. But when it comes to trading, sometimes you got to be a little more thorough. Price runs that 20-day high here. So we got that raid there. After that raid, we know that we took out buy side liquidity. Even though it's not a swing high, it is a clean high. Let's say like the wicks weren't there. Let's just zoom in because I'm blind. Let's say the high here is rated here. We can see that swing high here. Even though the 20-day high is here, there's a swing high that's rated right there. Even here, so too. So we have buy side liquidity ran above these clean highs. At that point, I would expect and try and anticipate if it's going to be a quarterly shift, a purge up here and then a revert back down to sell side liquidity below that low and or relatively equal lows as well. That's what I would like to see happen. Now, that may not happen because seasonals may say AU should be going higher, or seasonals may be saying that AU is going to be moving sideways. And when I'm saying AU, I'm mainly referring to just Australian dollar, not dollar in itself. Australian dollar is supposed to be moving sideways, or Australian dollar is supposed to be moving down, or distributing lower, or accumulating higher for the month of April. But there are times, like I said, I've shown throughout the year that seasonal tendencies do not always give the answers, because there may be a point of time where it's offline and it's not formulating and following the seasonal tendencies exactly. You have to use price action in combination. You can't just bank on seasonal tendencies. This year, overall, seasonal tendencies were pretty much almost flawless, I would say. Now we wait to see what happens. What would you do here? You're above in a premium. You're above the opening price and a premium for the month. We know being above fair value or the opening bid for the month is most likely ideal for sell scenarios. So for the seller, this is great because you just purged buy side liquidity. Now moving forward, we're going to see what occurs. Do we get a swing high formation that forms above the opening price? Because that's the cue to saying that that swing high might be the turning point and might be the protected high or the high of the month. So those are scenarios. So this high we would like to see not be broken. So this is a swing high that forms. Now, if price is going to continue to go lower, we want to see most likely a lower swing high or the break of a swing low. Those are only two scenarios I would like to see. So some type of mitigation block theory, right? Price fails to get above the high and continues to sell off and distribute lower. So see what happens. So you can see price now is still selling off, still selling, and you can see how we left the premium range of the month. We bring all the retail traders to what? The wrong side. It's strategic. It's done methodically. They want to get retail traders on the wrong side. The beginning of the month, there's going to be a lot of excitement. Lure the retail traders in that first week. Get all the retail traders to the table. NFP comes around, get everybody in. Price action, then just dumps on them. We can see it just completely distributes on them. Everybody went long in AU expecting it to go higher. Unfortunately, these are things you got to live with. You're not going to get it right all the time. And you see it sells off, and we would expect price to make some type of lower swing high. And we can see quickly we get a buy stop raid, which is unfortunate. But these are the things that you got to live with trading. Not everything is 100% and guaranteed. Would I have known that we were going to get a buy stop raid? I would probably say that's less likely. I would say no. I would probably want to see this high protected. And we can see price runs up and runs that buy stop and takes out that swing high. So we have what? A potential new trend unfolding. Could it be going back bullish again? So these are the things you got to consider. And these are the things you got to understand when it comes to experienced traders. You got to be able to know the ins and outs of the market because not everything is perfect. You see price once again gets above that 20-day high again. So we're still hitting this price point here. That's that IPDA 20-day high here. Price is hitting it multiple times here. We're back above the premium range again. And we can see the market does stall for a bit, which is not preferred. And we can see it does continue to break down. So we break a swing low. We create a buy stop raid here, create another swing high. So this is the high of the month. And then price continues to break lower, creates a lower swing high here. So we got a mitigation, and then price continues to go lower. I mean, we'd like to see it target what? That 20-day low still available. That's exactly what we're waiting for. So we play it forward. You can see we're end of our IPTA cast forward 20 days here. And notice, price does not have anything to do with any of these other levels, these IPTA levels here. Let's go back. Doesn't even get to that 60-day low. Doesn't get to that 40-day look back high, the 60-day look back high at all. Irrelevant because it just doesn't get there. Price doesn't target it. But we can see it's still trying to target the swing low here, this open float here. There's a lot of sell side liquidity below here. The sell stops are residing here. Anybody that was a buyer going up here was making buku money probably. We're just assuming, right? They're making buku money on the upway to the upway. Here, they got a stop loss probably below this low, below this low, below this low, below that low. They have a trailing stop. Eventually, the market's going to come take them out. and then we end going into May. Now imagine, let's continue this actually. So we're not going to stop it and say, hey, we're done with April's IPDA. Let's now go into May's IPDA as well. So we're going to continue this as like a part 2 video. So let's keep this in mind. We have, this is April's open. That's that swing high. And I don't like when the chart gets messy, but please follow along. Hopefully the chart is still up to your liking. We would count back 20 bars again from May 1st. And it's still perfectly still the same IPDA opening price for April the 3rd. So we know the highest high and lowest low within the last 20 days. So let's just count this back again. Would be this high up here. It would be this high. Get rid of that. And then the IPDA 20-day low would be this low here. I'm not going to do the 40 or the 60 here, just to keep it simple. And then we'll get rid of April's because we're heading into May. So May's opening price is here. Notice the levels are still intact. The IPDA from April, those levels are still significant. It's not as if price just completely left it alone and just forgot about it. It's still something the algorithm is still probably computing and still going to logically try and reach and mitigate and trigger orders. May's open. And as we play it forward, you see our price pulls itself above May's opening price. That's the IPDA range for May, 20 high and the 20-day low. This is April's IPDA 20-day low. You see price gets really close to IPDA 20-day high. Boom, got there. So May's IPDA 20-day high is ran here in a premium. And let's see what happens as we play it out. Quick sell-off, back down below May's opening price. And let's not forget, cast forward 20 bars. You can see 20 bars here, essentially getting right back down to IPDA 20-day low here. But look at the open flow. Look at all the equal lows that they're building in. They want to run this low eventually. They want to run that low. Play it forward, and we can see, finally, we get through May's IPDA 20-day low, and then also April's IPDA 20-day low. But notice it, the same thing that I've been showing, the examples over and over again, it's been the same. Purge buy side, revert back down to sell side. And I'm using it on the daily time frame in a larger scope. I'm trying to see where the large orders are residing on the higher time frame. Because if I know where they are residing, I have a better chance of finding trades in that direction with other filters. Other things follow in line. Sell after up days. Let's say I finally figure out that AU is bearish going into May, or AU was bearish leaving April. I have to wait for price to do what? Most likely purge a significant level, 20-day high, then go hunting for shorts. And price continues to sell off. You can notice after taking out that 20-day high for May's IPDA, after this up candle, when do we ever get another up candle? Right here. Up, sell after the up candle, sell. Up candle, sell. Up candle, sell. And look at how those would have been my most probable sell scenarios. Hopefully this was insightful. Peace.